Part 1. Introduction. Welcome back to Debt-Free Dreams, where we help you navigate the financial world and achieve your goals. Today, I'm breaking down the best crypto indicators that can take your trading game to the next level. Whether you're a beginner looking to make smarter trades or a seasoned trader seeking new insights, this video will show you the top indicators to use on platforms like TradingView and how to interpret them effectively for successful crypto trading. Stick around until the end, where I'll share some bonus tips on combining these indicators for maximum results. Check the description below for links to helpful tools. Let's dive in. Part 2. What are crypto indicators? Crypto indicators are tools that help you analyze price movements, volume, and market trends. They simplify complex market data, allowing you to make informed trading decisions. Think of them as your crypto compass, guiding you toward profitable trades. There are two main types of indicators. Lagging indicators help confirm trends and are best used in trending markets. Examples include moving averages and MACD. Leading indicators predict potential price movements. These include RSI and Fibonacci retracements. Now that we know what they are, let's look at the top crypto indicators you should start using today. Part 3. The best crypto indicators. 1. Moving averages. Why it's useful. Moving averages smooth out price data to identify trends over time. Simple moving average SMA averages the closing price over a specific period. Ideal for long-term trends. Exponential moving average EMA gives more weight to recent prices. Great for short-term trading. How to use. Look for crossovers. When the EMA crosses above the SMA, it signals a potential upward trend. 2. Relative Strength Index RSI. Why it's useful. RSI measures the speed and change of price movements, showing whether an asset is overbought or oversold. How to use. An RS above 70 indicates overbought conditions, potential sell signal, while below 30 suggests oversold conditions, potential buy signal. 3. MEC moving average convergence divergence. Why it's useful. MACD helps identify trend direction, momentum, and possible reversals. How to use. Watch for MACD line crossovers or when the MEC line moves above or below the signal line. 4. Bollinger Bands. Why it's useful. These bands show volatility and price extremes. The closer the price is to the upper band, the more overbought it is. The closer to the lower band, the more oversold it is. How to use. Look for price bounces off the bands as potential reversal points. 5. Fibonacci retracement levels. Why it's useful. This tool predicts potential support and resistance levels using key Fibonacci ratios 23.6%, 38.2%, 61.8%, etc. How to use. Draw retracement levels from a recent high to a recent low, and watch how prices react at these levels. 6. Volume indicators. Why it's useful. Volume helps confirm trends. Strong price moves accompanied by high volume are more reliable. How to use. Use tools like the volume oscillator or on-balance volume to track buying and selling pressure. 7. Glassnode on-chain indicators. Why it's useful. On-chain data provides real-time insights into the behavior of wallets, active addresses, and transaction volumes. How to use. Combine Glassnode metrics, the technical analysis for a deeper understanding of market trends. Part 4. Combining indicators for better results. Using one indicator is helpful, but combining multiple indicators can make your analysis even stronger. Here's how. Trend confirmation. Use moving averages with RSI to confirm trends and spot overbought, oversold conditions. Momentum and volume. Pair-MECD with volume indicators to track momentum shifts. Support and resistance. Use Fibonacci retracement alongside Bollinger Bands to identify key levels. Part 5. Tools to access these indicators. To make the most of these indicators, you'll need reliable trading tools. Here are my top recommendations. TradingView. The ultimate platform for charting and indicators. It offers customizable tools like RSI, MACD, Bollinger Bands, and Fibonacci retracements. Glassnode. Perfect for on-chain metrics to combine with your technical analysis. CoinStats. Helps track your portfolio performance and integrates with your favorite exchanges. Bybit. A great exchange for executing trades based on your analysis. Links to all these tools are in the description, so check them out for exclusive discounts. Part 6. For bonus tips for successful trading. Stay disciplined. Stick to your strategy and avoid chasing trades based on emotion. Practice strategies. Use backtesting tools on platforms like TradingView to test how your indicators would perform in past markets. Track your progress. Use a portfolio tracker like CoinStats and stay on top of your performance. Educate yourself. Keep learning. Markets evolve, and staying informed is key to staying profitable. Part 7. Wrapping it up. That's a wrap on the best crypto indicators for successful trading. By combining these tools with a disciplined approach, you can improve your trading results and make more informed decisions. If you enjoyed this video, please give it a thumbs up. Check the description below for links to helpful tools. Subscribe to Debt Free Dreams and turn on the notification bell so you never miss out on future content.